Yes, I think you're on the right track when you're looking at Guardian with the paid up additions and the term blend. A couple of reasons. One, you're not working with as much time as a lot of other people work with. So if you just get a regular whole life policy, those don't have a break-even period until 15 or 20 years down the road. So if you're wanting to use this for infinite banking, you're going to need to get some cash value in the policy right away. That doesn't happen with regular whole life design. If you just use a paid up dividend option and that's it, you're only going to get a very little bit of cash value in that policy. Break-even period is going to be quite a ways out. So it's not going to work very well for an infinite banking type of policy. Now, when we blend in the annual renewable term insurance, we're able to reduce the whole life insurance costs and still meet the guidelines for the death benefit so that we can get a high MEC, and we can meet that with that term insurance at a much lower cost and still put in all the money that the government will let us up to the MEC limit. So that is the best design in my opinion. And if you're looking at a 15-year period where you're going to be funding that, you're going to need access to that cash value as soon as you can get it. Now, the thing with Guardian is the optimal design with Guardian with that blend, it's about a 7-year pay. Okay? Now, there's a few reasons why that might actually work really good for you. We can stretch it out longer than 7 years, but we're blending this with annual renewable term. And so every year, that term insurance gets a little bit more expensive. So in your situation, you're not going to want that term insurance to stick around for a long time because it's going to continue to get more expensive. We're going to want to have that in there, dump in the money you're looking to dump in, and then get rid of that term insurance so that we can keep the costs in the policy as low as possible so that you can get that cash growth. So hopefully that makes sense. There was another part in that question that I wanted to address. I think it was right at the end. Can't quite remember what it was. Give me just a second. It was the dividend options. The dividend options. You want your dividend options to turn into paid up additions. You want your dividends to turn into paid up additions. You do not want to use your dividends to buy term insurance. Okay, that's not going to help you grow your cash value. It'll just give you extra death benefit at the cost of annual renewable term. So that, yeah, I would not recommend using that type of dividend option unless there was some other reason that you needed it to meet whatever death benefit you're trying to get. But you've already indicated to me that you would like to use the infinite banking, or you would like to use your policy for the infinite banking concept. To me, that means we're going to need access to that cash value, and we're going to want to see that cash value grow. So best way to do that is going to be to blend that annual renewable term, shorten up that period that we have that annual renewable term on it. And because you're getting into older age where that cost goes up, you may or may not want to continue making those payments on into retirement either, on the base premium part, the whole life part of that. So there's always a reduced paid up option as well after those 7 years. Or you can keep making the minimum payments at the base premium level for as long as you live. Which one of those you decide to go with is going to depend on where you want that death benefit to be and if you have the income to continue paying those premiums. So a lot of different things we can look at. These are the questions that we answer when we do our one-on-one session. So feel free to sign up at my Calendly link. There should be a link in the chat, and there is a link in the description, and there's a link on my website where you can sign up for a meeting with me on my Calendly. My schedule is on there. You just pick a time that works good for you, and I'll be there to help. So thanks for your question.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.